Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Paul Sweeney in the Bloomberg Interactive Brokers Studio in New York. Paul, important to keep in mind the jobs report. It's backward looking. It doesn't tell us anything about how people are spending money right now. And the Delta variant, it's really throwing a wrench in things.
It really is, and it's different parts of the country. At this point, one of the questions that I've heard from some of the experts are trying to get some answers for is the duration of this Delta variant. How quick will it kind of run its course? And no good answers right now.
Yeah, company CEOs, uncertainty is the word of the week. Well, we're going to have more on that in just a few minutes with Reed Pickard. In the meantime, let's get a check on the trading day with John Tucker.
All right, guys, payrolls did climb by 943,000 last month. Upwardly revised increases in the prior 2 months for the report. Well, that's led to a rotation out of growth into economically sensitive cyclicals as the S&P 500 climbs above its record close that we saw yesterday. Best performing industry groups belong to the financials, the materials, energy, and industrials, information tech, and consumer discretionary stocks right now, the biggest drag. And the best performing stock in the S&P 500 belongs to Corteva, the agricultural company, beating its second quarter earnings estimates, also raising its full year guidance for investors. Then you have the worst performing stock in the S&P 500. That belongs to Expedia Group, with questions about the future of travel as the Delta variant starts to spread right now. And NYMEX WTI crude today, the September futures settling at $68.28 a barrel. In the meantime, the White House reportedly thinking of withholding federal funds from institutions that don't get enough of their people vaccinated. According to the Washington Post, the threat could apply to long-term care facilities, cruise ships, universities, and more. Andy Pekos with the Johns Hopkins Bloomberg School of Public Health says there's some frustration about COVID surging in areas where vaccines are lagging.
You know there's a tool on the table that can work, that's safe, and yet it's not being implemented well enough to really make a difference in terms of this fourth wave in the United States.
Andy Pekos at Johns Hopkins. About 90 million Americans are eligible for shots, but either refuse to get them or have been unable to just yet. The S&P 500, 7 points higher, 44.36 right now. Dow up 142 points. Tech-heavy NASDAQ down 61 points. And we check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. And that is your Bloomberg Business Flash.
Thank you so much for that update, John Tucker. Paul Sweeney, Tim Stenevec in the Bloomberg Interactive Brokers Studio in New York. Paul, earlier this week, you and I got the news in the afternoon that the New York Auto Show was canceled. We were discussing that it felt like one of those moments, like from March of 2020, where you think things are going a certain way, and then you start hearing about these events being canceled. Yep. And that changes things. Indeed, the Delta variant is increasingly threatening some parts of the U.S. economy. Reed Pickard writes about it on the Bloomberg Terminal and on Bloomberg.com. She's U.S. economy reporter for Bloomberg News. She's on the phone in Washington, D.C. Reed, help us make sense of the jobs report that we got today, coming at a time when companies are saying, wait a second, we told you to come back to the office in September. Hold that thought, maybe October, maybe January.
Absolutely. So the Delta variant, as we all know, is spreading rapidly. And as a result, it's injected a lot of uncertainty into the economic outlook in just a couple of weeks. So we got a fantastic jobs report today. But the key thing to keep in mind about it is that it's a snapshot of mid-July. So in the weeks since then, Delta has escalated, and companies like BlackRock and Amazon have all pushed back their return to work dates. And as you mentioned just now, you've also started to see conventions start to get canceled. So we're trying to monitor high frequency data as a result. And you're just starting to see it might be having an impact on spending, particularly on things like entertainment and travel. But the key with these high frequency indicators is there is a lot of noise. So interpreting this volatile data on a week to week basis can be quite challenging.
Yeah, it does, but I think it's really helpful for those that can really spend the time with it, because I think about certain data points like open table, restaurants. Where's the restaurant traffic? What are we seeing in the last week or two? Because as Tim and I have been talking about, it just feels like this Delta variant discussion is really heated up over the last couple of weeks.
Right. So right now with the open table data, we haven't seen a clear downward trend yet. But the thing that did stick out to me that I thought was quite interesting, so there's a company called Castle Systems, which essentially tracks electronic access to office buildings. So, think of like the little fob that you often swipe to get into your office building on each day. And you started to see this pullback last week from its pandemic peak just a week earlier. And so we're starting to kind of see these moments where it's not, you're not sure if it's a 1 week thing or the start of a broader trend. But the fact that it could be the start of a broader trend is part of why there's all of the economic uncertainty that we have, and plays a lot into, how long we think this is going to last, what the economic effects are going to be. But when it comes to monthly data, things like the jobs report, we're going to have to wait a little while until we can actually start to see any impact in those figures.
Paul and I were talking about this during the break, and it seems like, at least the way that we're living right now, I haven't pulled back my spending. I'm still going into the office.
Maybe it's the metro New York area has got generally a high vaccination rate.
Great point.
Maybe it'll be interesting to see on the regional side.
Reed, what is the other data that we should really be keeping an eye on? Because you do point out that total spending using Bank of America debit and credit cards decelerated meaningfully last week, according to economists from the bank.
JP Morgan actually had a note out today as well, using their Chase card spending data that showed a similar kind of picture in terms of a pullback in spending on travel and entertainment categories. But I do want to talk a little bit about today's jobs report, if that's okay.
Yeah,
because
please.
It's one of those things that, not often do we get to talk about a report that's kind of great across the board. This obviously had a couple caveats, and like every report does. But I think it showed us that heading into the Delta variant, we had a lot of momentum. So not only did we get more jobs than we expected for the July report, but we also saw a pretty significant upward revision to the prior month as well. So you had all this job growth, you saw unemployment decline more than most people thought, and you saw the number of long-term unemployed, or the folks who have been out of work for 27 weeks or more, fall by the most on record. So there's definitely this sense that you have this massive wave of economic momentum heading into Delta. And obviously Delta proposes, adds uncertainty. But for now, most economists see Delta as a downside risk rather than fundamentally changing their baseline forecast.
Hey, Reed, thanks so much for this. We really appreciate your reporting here. Reed Pickert, U.S. economy reporter for Bloomberg News, joining us on the phone from Washington, D.C. All right, now let's get the latest world and national news with Denise Pellegrini in the Bloomberg 1130 newsroom in New York.
Hey, Paul, thank you. We've got some strong words from Governor Murphy as he announced that the mask mandate is coming back at New Jersey schools.
There are issues that are and must always remain above politics, and this is one of them. Anyone telling you to wear a mask is quite simply lying to you.
And Governor Murphy commenting, saying the decision was made because of the widely contagious Delta variant. President Biden applauding the strong jobs report. We've been giving you exclusive insight on all day here on Bloomberg Radio, and the president says if more people keep getting vaccinated, the progress on jobs will continue.
I'm pleased to report the past week we've seen the first time vaccinations in America go up by 4 million people getting back, 4 million shots. That's more than we've seen in a long time.
And the president also says other precautions like mask wearing will help the economy. A New Jersey gym owner is the first defendant to plead guilty to assaulting law enforcement officers during the January 6th insurrection at the U.S. Capitol. Scott Kevin Fairlamb's deal with federal prosecutors could be a benchmark for dozens of other cases of accused rioters. And Fairlamb's attorney says prosecutors will recommend a prison sentence of up to 4.5 years. And a floating restaurant is opening on the East River. That'll be next next month. It's called Platinum Coast. It'll be offering meals by award-winning chefs for 5 days in mid-September. You need to be a premium American Express customer, though, to book reservation. Tickets going on sale August 19th. Global news 24 hours a day, on air and on Bloomberg Quick Take. I'm Denise Pellegrini, and this is Bloomberg.
Thank you so much, Denise Pellegrini, for that update. A new story in the Bloomberg terminal, among the most read this afternoon, is by our own Scott DeVoe. Disney needs to offer an all-you-can-eat streaming service. Activist investor Dan Loeb calling on Walt Disney to do more to leverage its leadership position in sports, general entertainment, and blockbuster franchises in order to unlock the full potential of its streaming services. Okay, let's take a step back, Paul, and just talk about in the context of how late to the game Disney was when it came to streaming and how they have knocked it out of the park with Disney+.
Yeah, they were, obviously Netflix had a multi-year head start on all of the media companies, quite frankly. They were all late to the game. But Disney, when it did decide to get in, doubled down and went all in, and most notably by buying 21st Century Fox for $74 billion. And now they have Disney+, and that's where like a lot of the traditional Disney stuff goes. They have Hulu for some of the more racier Fox-driven content, and then they have ESPN Plus for all their sports. So they have 3 platforms. I think Dan Loeb is suggesting, hey, put it all together under the Disney Plus brand. And the key thing he's saying is the movies, forget about the theaters. Day and date, which means as soon as they come out, they go on the streaming services. That would be a significant change for any media company.
Look what's happening with Scarlett Johansson right now, right?
Yep.
So does this, as somebody who covered media, as a media analyst for decades, is this too much too soon? Like, did the pandemic show us that we don't need movie theaters, like Dan Loeb says?
Maybe. Really, the jury is still out there. There is some evidence here just in the last several months where if it's a big tentpole film like a Marvel film, an action film, you can get good box office, very good box office, and then a week or 2 or 3 or 4, maybe a couple months later, put it out on streaming, and it will do well as well.
Charge for it on streaming?
Yes. And so it remains to be seen about some other types of content. So they're really, the short answer is they don't know yet. They're trying lots of different models. But Dan Loeb, who's been a supporter of Disney, is just saying, hey, let's go really all in on streaming.
Yeah, the question is to what extent do they follow his suggestion? Check it out on the Bloomberg.com and on the Bloomberg terminal. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. A better than expected increase in U.S. payrolls, fueling expectations. Federal Reserve is moving closer to pulling back some of its stimulus. As a result, the U.S. dollar strengthening. We have Treasury yields rising, but they are off the highest levels of the session. 10-year right now, 128. That is up 6 basis points. You have the S&P 500 adding to its record gains from yesterday, led by financials and materials. The NASDAQ 100, tech-heavy NASDAQ, lowered today. Job growth did accelerate in July by the most in almost a year. The unemployment rate, that declined. You have momentum in the labor market as it grapples with hiring challenges. Amazon.com ordering frontline U.S. employees to resume wearing masks at work. This is regardless of their vaccination status, and they're joining the ranks of companies ramping up precautions in response to the spread of the Delta variant. S&P 500, 4 points higher right now. That is off the best level of the session, up 0.1%. We're at 4433. The Dow's up 119 points at 35,183. The NASDAQ Composite Index 67 points lower at 14,827. And we check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
All right, John Tucker, thank you so much. We appreciate it. Again, the narrative we've had, Tim, for the last 17, 18 months, it is, what is a virus? What is a coronavirus?
Right.
What do we name it? What do we call it? And oh my gosh, this is bad. This is much worse than we thought. This is not just going to go away. Then it became one, thankfully, of shutdowns and all that thing. And then it became, oh my goodness, these vaccines came. And they came perhaps earlier than we thought. And oh boy, are they efficient and did they get the job done? And now it seems to be getting jabs into people and vaccination rates and mass. But now we've got a Delta variant.
It is throwing a wrench in everything.
Yeah, it seems like we're just hitting rewind a little bit here. And again, the discussion points are, boy, we got to get people vaccinated. And two, mass. We have to have that discussion again.
Yeah.
I think that's coming back.
It's definitely coming back, especially in the context of school, Paul. It's interesting because, and I've talked about this week, but there is this air of uncertainty around corporate earnings, and at least when it comes to guidance. And companies just don't know what the Delta variant is going to do in terms of changing consumer behavior. Peter Kern, the Expedia Group CEO and vice chair, was on Bloomberg TV earlier today. He said that even though this isn't COVID all over again, like this isn't lockdowns, at least here in the U.S., when it's more of a wave, right? When cases go up, local governments around the world change their recommendations. Some, he said, like Australia, lockdown. That changes things, and it changes things in an unforeseen way.
Yeah, it does, and it just kind of just reminds us that this is going to be with us for a while in some form, and it's a question of how has been from the beginning, how we alter our behavior, how we deal with it, how we engage with it on a daily basis. Thankfully, many people are vaccinated in many parts of the world. Unfortunately, many parts of the world are tremendously under-vaccinated, and that's where the focus needs to go on a global scale. But given that there is good vaccination rates in many parts of the world, we're told by the experts that this is different. We can live with this. We can work through this. But there may be some time for some asking.
Well, let's talk a little bit more about the virus and vaccines because it is the cover of this week's Bloomberg Business Week. It's available on newsstands and at Bloomberg.com/businessweek. It is a double issue. It has a fantastic group of stories. Joel Weber is editor of Bloomberg Business Week. He joins us now on the remote from Massachusetts. I want to start, Joel, with the cover here. Vaccine mandates for kids is the next big back-to-school fight. It is the cover story by Riley Griffin and Susie Ring. Take us into, we talked to you earlier this week about the story. Take us into the cover, though. Who is it, and how did you choose it?
Amazingly, this is the daughter of one of our art directors on the staff.
Really? This is not a stock photo?
Yeah, not a stock photo, and we shot it last weekend. She actually is a Gap model, or has been a Gap model, and we kind of took her out of her retirement.
Did you have to get her agent to approve this?
Dad approved.
Okay,
yeah,
good.
We did not pay Dad for this. So we tried to look a little bit into the future with this story because we're just around the corner from the school year starting. We're going to have a real moment here with society when schools reopen and kids who, obviously below 12 don't have vaccination abilities yet, but 12 to 17, we've seen really lackluster numbers. And so we're going to see a really interesting moment here if schools decide to mandate vaccines as kids begin going back to school, those that can get vaccines. And then, potentially as early as the beginning of the new year, we could see kids under 12 start to get vaccinated as well.
Yeah, it's interesting. And Joel, you probably saw the news, but here in the state of New Jersey, where I live, the Governor Murphy just announced that schools will require masking. Everybody's coming back, full service, everybody in the classroom, but going to require a mask, and that appears to be one path forward. And some states, I think of Florida, maybe taking a different path.
It's going to be
safe to say.
And masking is divisive, and vaccination is that plus times 1,000 really. And what we know though is the Delta variant being such a variable here. I think we're going to see more and more states come around to a masking mandate, at least for school, as sort of an entry point, right? And obviously, I think some of those decisions are going to break down politically, at least along state lines. But yeah, that masking mandate is sort of part of it, and the vaccination discussion isn't far beyond. Now, keep in mind, the other variable in all of this is that schools mandate vaccines all the time. What's different about the COVID one is that we still don't have any FDA backing, and that FDA backing is sort of the thing that everybody's watching for.
Yeah.
We're still under the emergency use authorization.
I don't imagine, though, that people who are declining shots right now are going to be lining up once the FDA fully approves these vaccines. But we'll see. Because
of Delta, we've actually seen some uptick in places in terms of inoculations in places that had been heretofore slow to adopt. So it is yet another thing that can hopefully help overcome some hesitancy.
One thing that we were also talking about this week, Joel, and it's in the current issue of Bloomberg Business Week, is the mad rush to deliver groceries in 10 minutes. VCs have bet billions of dollars on getting you bananas and beer in a very short period of time. What's the opportunity there? This is a story by Alex Webb of Bloomberg Quick Take over in London.
The illustration for this story is awesome. It's a little beer can with rocket jets on attached to its back. There have been the Instacart kind of services that have effectively teamed up with grocery stores to do delivery for the past year. But the other phenomenon is this new thing where we're seeing basically what are dark stores pop up, and these locations are actually their own services. Things like Gorillas is a one, Getter is another, GoPuff is another. There's other ones. Even New York has its own versions of this, but they're all promising basically to be able to deliver groceries within 10 to 15 or 20 minutes. And VC has spotted a huge opportunity here to disrupt the corner deli. Those corner delis have long been very profitable, and by pouring a ton of VC money into this, it's opened up an opportunity. But the thing is that window is dependent upon being there without that much competition, and we're already seeing so many competitors that potentially the profit won't be sustainable.
I love the corner bodega.
I know, I do too.
I think most neighborhoods
Who would want to take it from you, right?
I had to go to ours this morning to get some milk. We ran out of milk, and it was closed. I had to go to, it was too early. I had to go to one that was way further away. And I was actually thinking about this story.
Yeah.
Because it was like the one time where I needed to get milk in 10 minutes or less. Joel Weber is editor at Bloomberg Business Week, joining us each and every day here on Bloomberg Business Week Radio, of course. Check out the current issue of Bloomberg Business Magazine, available on newsstands and at bloomberg.com/businessweek. For those of you listening in New York, D.C., and San Francisco, or watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is next.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm John Tucker in the Bloomberg Newsroom. It is Bloomberg Business Flash. Economically sensitive cyclical stocks outperforming growth names today. This comes after the better-than-expected jobs report. The report marks another step toward the Fed's goal of substantial further progress in the labor market. Also raises expectations the central bank is going to start to cut back on its stimulus programs. At BlackRock Financial, Jeffrey Rosenberg, he reacted to today's jobs report.
This is a very strong report across all metrics. There's very little that you can point to here that's disappointing.
The best performers in the S&P 500 right now, they belong to Corteva. Then there's DXC Technology and the packaging company Ball Corporation. A commodity powerhouse, Cargill, has cashed in on the booming agricultural markets with the most profitable year in its 156-year history. The largest private U.S. company, which dominates markets like corn, had almost $5 billion in net income during its 2021 fiscal year through the end of May. This is according to the financial reports just seen by Bloomberg News. Right now, we have the S&P 500. It is giving up some of the earlier gains. Right now, up just 3 points. That's still good enough for an intraday record. We're at 4432. The Dow Jones Industrial Average, it is up 111 points. That's up 0.3%. We're at 35,174. And the tech-heavy NASDAQ Composite Index, 72 points lower. That's down 0.5%. We're at 14,822. Now, yields, they are higher after today's jobs report. The 10-year yield at 1.29%. That is up 6 basis points right now. And the euro 117.59. You're listening to Bloomberg Radio.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Hey, it's Bloomberg Business Week. Tim Stenovic and Paul Sweeney in the Bloomberg Interactive Brokers studio in New York. You heard Paul earlier mention New Jersey Governor Phil Murphy mandating masks in schools as cases increase among a younger population. That next month is going to start in-person lessons. Also, some other virus headlines. United becoming the first major U.S. carrier to require employee inoculation. And J.P. Morgan Chase, as we talked about earlier, is bringing back its mask requirement, as Amazon did, for frontline workers, even for those people who have already been vaccinated. So a host of virus news to get to. Let's do it as we do each and every Friday with Dr. Ian Lustbader, clinical professor of medicine at NYU Langone's Medical Center, joining us on the phone from New York City. Dr. Lustbader, always great to check in with you on Fridays. It feels different now, and I know I don't want to say that we're not looking at the data, because the data is different, and that's why it does feel different, I think. Where are we in terms of getting out of this pandemic?
Hello, Tim and Paul. Hope you guys are doing well. I think in terms of the pandemic, it's becoming pretty obvious that essentially everyone, certainly in the United States and globally, is going to be exposed to the Delta variant. We always, even at the beginning of this with vaccines and so forth 2 years ago, talked about slowing the spread. And I think that's really all we can hope for, is to slow the spread. Everyone is going to be exposed at this rate. The vaccinated people certainly have an advantage in the sense that at this time it looks like the vaccines, even as antibody levels drop a bit, are really avoiding, for the most part, hospitalizations and severe disease. You know, the unvaccinated typically will get a bad cold, but certainly a significant percent will get hospitalized. And at this point, it looks like the vast majority of patients who are hospitalized with COVID are unvaccinated. So vaccines are one arm. Everyone is going to be exposed. Even those who have been vaccinated may well get Delta to one degree or another. It looks like they will avoid severe disease. And we're relying on other things to kind of hold things up. Masks, for example, which also are not a cure-all by any means. They do reduce spread, maybe 50 to 70%, depending on the kind of mask. Obviously, the N95 is more effective. So I think what we're doing is trying to have a variety of techniques to mitigate, because we're really not going to stop the pandemic at this point. There are just too many people who are unvaccinated. It's too hard to distribute all these vaccines. And I think all we can do is do our best to sort of protect vulnerable people while the pandemic plays out. And this is really what happened in 1918, unfortunately without vaccines. But it took about 3 years for everyone to get infected, 50 million plus dead. And ultimately it went away, and I think that's what's going to happen here. But there will be more carnage before that happens.
Dr. Lustbader, I want to get a sense of timing, if we can even do that, in terms of this Delta variant. Is this something that could burn itself out quickly, or is this going to stay around? I'm thinking about some of the short surges we saw in the UK and in Israel. Is that what we're going to see here, or is this going to be here for longer in terms of this variant?
You know, I think that's a good question. I think in the next few months, we are going to have a significant increase in cases throughout the United States. And basically, everyone in the U.S., probably by the end of the year, will be exposed, and whoever gets sick, will get sick. And so I think in the U.S., it probably will burn itself out. Globally, it probably will continue. And of course, as it continues globally, there's risk of other variants. So I think Delta will burn itself out in the United States. Fortunately, it doesn't seem to be much worse than the original Alpha variant, maybe in some pockets, certainly much more contagious. But I don't think COVID will go away, and it may even become a chronic illness like influenza, where you do get a yearly shot. We don't really know that yet. Hopefully that won't happen. It did not happen in 1918 with influenza, which is different. But I agree with you. I think we're going to see a surge in the next few months, and then probably a significant drop in cases as the wave goes through the United States.
Is this the last wave of this pandemic?
Good question. I think at the end of this wave, everyone in the United States, 300 million plus, will have been exposed one way or another to COVID. Either they will have had the vaccine, they will have had the disease, or they will have recovered or died. So I think in the U.S., come mid-year, I think we'll be in a somewhat better place. If there's still new variants that are coming up and our antibody levels are dropping, which they probably will, we may need a booster sometime, late fall, early winter. The FDA hasn't really commented about that. Most people that I've checked still have good antibody levels. Some are still getting Delta, because the Delta is a little resistant, has mutated enough so that our antibodies don't fully capture it. So if a new strain were to come along that's significantly different, that could be a problem come, next spring.
Dr. Tim and I always like to, when we have experts and frontline healthcare workers on, we like to ask how the folks at your facility are doing. It's been such a long 17 months. How are they doing right now?
So, I think the hospitals in New York really had a terrible siege a year and a half ago. We were really the epicenter. Fortunately, now the case rate, the incidence is somewhere 3% plus or minus. There are not many cases in the hospital. All of those cases are unvaccinated. Most are doing fairly well. So I think this area in the Northeast is doing fairly well. That is not the case in other parts of the country. So I think in the Northeast or the tri-state area here, I think we're going to be okay. Kids with masks and so forth, I think maybe treating ourselves more than treating the disease. But, there are pros and cons to that. But I think we are through the worst of it in New York, as best as I can tell.
Well, that is certainly some good news to end on. Dr. Ian Lustbader, clinical professor of medicine at NYU Langone Medical Center. It is always a treat to talk to you each and every Friday, Dr. Lustbader. Thank you so much for taking the time. Let's now get a check on the latest world and national news with Denise Pellegrini in the Bloomberg 1130 newsroom in New York. Hey, Denise.
Hey, Tim, thank you. Well, we have Amazon now telling warehouse workers to mask up again as the Delta variant spreads. It says it wants all workers in its warehouses and other logistics depots in the U.S. to resume wearing masks, and that will begin on Monday. President Biden calling on state and local leaders to continue expediting the distribution of more than $45 billion in rental assistance.
Keep the local economy strong. That money has to get out now. I'm urging all local officials to get that money out.
And Biden speaking to reporters, also saying vaccines are what's driving the improvement in the jobs report. A key vote expected tomorrow on the bipartisan infrastructure package. That's after weeks of tense negotiations. And House Speaker Nancy Pelosi asked by reporters if she plans to recall her chamber if the Senate passes both the bipartisan infrastructure package and reconciliation package during the August recess. And Pelosi replied, well, we'll see what happens during her briefing today.
We're going to do this when we can do it all.
And we'll be tracking it all for you, Pelosi's comments and everything else here on Bloomberg Radio all weekend long for you. A New Jersey gym owner is the first defendant to plead guilty to assaulting law enforcement officers during January 6th attack on the U.S. Capitol. This is Scott Kevin Fairlam. He has a deal with federal prosecutors that could be a benchmark for dozens of other cases of accused rioters. Fairlam's attorney says prosecutors will recommend a prison sentence of up to 4.5 years, but the judge isn't bound by them. And rising tension between the U.S. and Iran related to last week's attack on the motor tanker Mercer Street off Oman. The officials saying it was due to an unmanned aerial vehicle produced in Iran. I'm Denise Pellegrini, and this is Bloomberg.
Thank you so much for that update, Denise. Tim Stenovec and Paul Sweeney in the Bloomberg Interactive Brokers Studio in New York. Paul, among the most read on the Bloomberg terminal is a story by Byron Trott, banker to the world's richest families. Turns out he's also a billionaire worth $3.6 billion.
Yeah, I followed his career closely, you know, being on Wall Street for 30 plus years. We competed against him a lot for deals, usually not very successfully when he was at Goldman Sachs. You know, what's amazing about Byron Trott is he's a Midwestern guy. He stayed in Chicago his whole career. You know, the New York Goldman Sachs guy said, hey, come over here, run this business in New York, go to San Francisco. Nope, I'll stay right where I am in Chicago. My bread and butter is Midwest industrial companies, their families. I am their banker. They know it. I'm not going to leave and go for the, you know, the latest flavor on the block, whether it be the tech IPOs in the 90s or anything else. So he's had a great career. Obviously, his number one client is Warren Buffett. That's a good client to have.
Right.
And then recently he set out on his own to have his own investment bank and create a tremendous value for shareholders and for himself.
Well, I was going to say, speaking of Midwest industrials, Warren Buffett.
Yep.
He is the most notable client. He's also, as you mentioned, on his own now. He's 62 years old. He's the founder of BDT Capital Partners. Over the years, Paul, he's quietly amassed, according to the Bloomberg Billionaires Index, a $3.6 billion fortune. Think back to when he, the reason why I think this is partially interesting right now is for a host of reasons. One, though, is because Weber, the grill maker, went public this week. BDT is the grill maker's majority owner. Trott and his family, they personally own a 5% stake that's worth upwards of $240 million right now. That, according to a regulatory filing.
That's a good trade. He sits on the board of Cox Enterprises, which is a company I know very well in Atlanta, a media communications company. Some of the highest quality people I've ever met in my career. He sits on the board. That shows, quality attracts quality.
We're going to talk about Warren Buffett a little bit more in just a few minutes because Berkshire Hathaway's earnings are set for tomorrow. This is Bloomberg Business Week.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom. It is Bloomberg Business Flash. After today's jobs report, the major averages right now, they are mixed. And right now, let's head to the Bloomberg First Word Breaking News Desk for today's afternoon call. And here's Bailey Lipschultz.
And good afternoon, John. As you said, stocks are mixed with the S&P 500 at a record, while the tech-heavy NASDAQ 100 is trading in the red. The Dow is up 120 points, S&P higher by 5, while the NASDAQ is down 70 points. U.S. 10-year yield is at 1.29%, and small caps are up 1.1%. 6 of the 11 main S&P sectors are trading higher, led by gains in financials and materials, while consumer discretionary and tech are among the worst performers. NASDAQ biotechs dropped 70 points, transports gained 60, semis are off by 15 points, while the VIX is lower by 3.6%. Leaders in the Dow, Goldman Sachs, JP Morgan, and Dow Inc., while Amgen, Home Depot, and Apple are the worst performers. After earnings, Expedia tumbled after warning about travel trends in the second half of the year, and Zynga sank after its outlook fell short of estimates. Novavax tumbled after its COVID-19 shot faced another delay, while Moderna traded slightly lower after a pair of analyst downgrades. In other news, activist Dan Loeb is calling on Disney to offer all-you-can-eat streaming. Wrapping things up, Robinhood soared as insider sales are on hold until clearance from the SEC. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. John?
All right, Bailey, thanks very much. And some breaking news crossing the Bloomberg right now. The Securities and Exchange Commission has approved a NASDAQ plan for boosting corporate board diversity. Again, the Dow up 121 points, S&P 500 adding to its record close, up about 5 points right now. The NASDAQ down 67 points. To hear live breaking news over your Bloomberg, type squawk on your terminal. And we check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
All right, John Tucker, thank you so much. We appreciate that as always. All right, Berkshire Hathaway reporting earnings tomorrow. Everybody's going to be looking, obviously, for how the company is dealing with the current environment. But, of course, people really want to hear from Warren Buffett. And what is Warren Buffett and his team going to do with all that cash on the balance sheet? What's the next big deal? Kat Chiglinski joins us. She is our ace Bloomberg News reporter on Warren Buffett and Berkshire Hathaway. She joins us on the phone from New York City. Kat, thanks so much for joining us here. First question, really tough one. This might throw you back. Why did they report on Saturday?
It's a weird quirk, and it definitely makes for a busy week for all the reporters following Berkshire. But it is he tends to actually like to report on days in which shareholders can take some time to look at the release without getting swamped by too much coverage of it. So you know, he has the weird quirk, but he's loved to put it either on.
He gets everybody's attention. I mean, he's got full attention of the marketplace.
True.
And what about that cash that Paul mentioned? What do we know about the types of deals that Berkshire Hathaway is looking at right now?
Well, and that's the biggest question, right? And, you know, Berkshire has simply too much cash and too few opportunities. They really haven't been able to strike a ton of deals recently. And that's been weighing on them for the past couple of years now, especially with the SPAC boom going on. But one of the biggest questions is, will they have other avenues to deploy it? You know, Berkshire and Buffett have finally started doing more share buybacks, and we have a hint, you know, that they did at least more than $6 billion worth of buybacks in the quarter, which is a substantial amount. But when you're Berkshire and you're throwing off that much cash, you know, it's a little hard to tell if that's actually going to be able to keep up with the gushing flows of cash that the conglomerate produces. And I think that's going to be the biggest key. You know, a couple months ago, we learned that Greg Abel is in line to take over for Buffett once he decides to step down. And I think
that's the key there, once he decides.
Yeah. Agreed. And, you know, he's coming up on 91, Buffett is. So I think he really loves to stick with this business. But every earnings from here on out, everyone's going to be scrutinizing it more, because it's one thing to say, hey, you know, I'll give Warren Buffett the benefit of the doubt and maybe he can find, you know, another deal months down the line and it's worth him waiting. It's another thing to say that, you know, hey, I'm going to give Greg Abel that benefit of the doubt.
Do we have any idea how their investment philosophy, their operating strategy may change under a Greg Abel?
Well, we know for certain that Greg Abel is going to face more pressure, and that might mean, Buffett has long shied away from dividends. He finds buybacks to be a much better use of shareholder return. There is a chance, and analysts keep raising this point of, Greg Abel might face more pressure to actually issue a dividend and have a one-time, way to release that cash. We've also been seeing, and this is, a little different from Berkshire. There was a hint that Berkshire sold this vacuum cleaner company, Kirby, just in recent months. And so there is sort of this idea that maybe Berkshire is at a point in which it is really saying, look at all the companies we own, are all of them sort of worth owning in the same way? And that could be something that potentially changes. But obviously, just one company down, we'll see whether they sort of take that tack with other ones.
I think it's really notable that the company can't find deals right now, considering that we are likely going to see a record summer in terms of amount of money spent on deals, and 2021 is looking like it's going to be a record year. So what makes a Berkshire deal a Berkshire deal?
Agreed. And I think actually Berkshire's pitch has just sort of been lost in the stream of capital that's coming after all these deals. I mean, Berkshire's pitch for a long time to potential companies is, hey, if you're a family-owned business in particular and you want it to have a home at this conglomerate that will let you sort of run the business like you've wanted to run it and give you that sort of freedom to handle things on your own, that autonomy, that's something to be found at Berkshire. And that's an enticing pitch, I think, for many companies. But when you have private equity and you have SPACs and you have all this money on the sidelines, Buffett doesn't want to overpay for a deal. And so, if other companies are willing to pay up for some of these acquisitions, Berkshire, is going to lose.
I'm looking at the 5-year chart, the comp function, COMP, and over the last 5 years, Berkshire Hathaway's underperformed the S&P. Is there any pressure building?
I think there's a lot of pressure building. Yeah, Berkshire has underperformed the S&P 500, and it's gotten to a point where I think people really question the size. I mean, it's a huge company, and when you look at all the array of businesses it's in, sometimes that breadth is beneficial in that, when one business is doing well, maybe another business is not, and it sort of offsets it. But I think the idea that there's not that many huge deals that Berkshire can find for a well-priced, price. And I think that sort of question is going to continue to make investors a little more cautious on the stock.
Kat Jaglinski, finance reporter for Bloomberg News. She's going to be up early covering Berkshire Hathaway earnings on Saturday morning, and we certainly appreciate that. This is Bloomberg Radio, and this is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week on this Friday afternoon. Tim Stanavek and Paul Sweeney in the Bloomberg Interactive Broker Studio in New York. Paul, are we going to go one for five or two for five?
I'm feeling good today. It's
You are?
Friday. I'm got a little
feeling lucky?
I'm going to talk a big game, and hopefully I can back it up.
All right. We are, of course, talking about the Song of the Day with Dave Wilson, Stocks editor. That's coming up in just a minute. In the meantime, let's get a check on the trading day with John Tucker. Hey, John.
All right, guys, payrolls climbing by 943,000 last month. Upwardly revised increases in the prior 2 months as well. The unemployment rate dropping to a pandemic low, 5.4%. Earnings, hours worked, they remain elevated. Now, the idea of a good report leads some investors to think the Federal Reserve is going to pull back on the stimulus that has been so good for stocks. Today's jobs report leading to an increase in rates that adding up to improved net interest margins for banks as a result in the S&P 500. Financials among the best performing industry groups. Some of the biggest drags coming from tech, including Amazon, eBay, Etsy, all which were down. Best performing stock in the S&P 500 belongs to the agricultural company Corteva, beating its second quarter estimates, raising its full year guidance. And at least one analyst says the results show the company's best-in-class setup. Well, the surging Delta variant has upended businesses' plans to get workers back in the office. Wall Street firms like BlackRock, Wells Fargo, Citigroup have shifted their policies. J.P. Morgan and Goldman Sachs sticking to their timelines. Andy Pecos at the Johns Hopkins Bloomberg School of Public Health says there are ways to return to the office safely.
You know, staggered work weeks. Maybe you don't want everybody coming in 5 days a week, 40 hours a week like they did before. Vaccination and vaccination mandates if you're coming back to work.
He says something as simple and inexpensive as regular saliva testing can help employers keep track of infections in their offices as workers do come back. S&P 500, 6 points higher. The Dow Jones Industrial Average up 138 points. The Nasdaq Composite Index is down 63 points. The 10-year yield at 1.29%. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Thank you so much, John Tucker. This is Bloomberg.
There.
If you were at Woodstock, then we need to have a talk with your parents.
Yes,
because
my oldest brother was there.
Well, there you go. Obviously, your oldest brother didn't kind of clue you into Sly and the Family Stone.
That's a good one, yeah.
Oh, my gosh. I figured you had a shot at that. I want to take you higher.
All right.
Okay, I was close. Higher like the S&P 500?
Yeah.
Okay.
And then you've got Wall Street strategists talking about how much higher it might go. Just think about like this week, right? We heard from Goldman Sachs, David Kostin, and he's anticipating 4,900 at the end of next year. And Ed Yardeni.
Next year? End of this year?
No. 4,700 this year.
Okay,
4,900
this
next year.
Okay.
I'm talking about looking out.
Okay.
And usually strategists aren't so quick to make next year forecasts. It seems that some of them are kind of moving a little earlier than usual. Ed Yardeni over at Yardeni Research, he posts on LinkedIn the latest piece of his, S&P 500, 5,000.
Oh, that's a nice round number. Yeah.
For the end of next year.
Yeah, 47,
Here's
49.
another nice round number for you, Paul, 6,000. That's what Jim Paulson over at Luthold Group, who's...
we get him on Bloomberg Radio occasionally.
I mean, he's their chief investment strategist, and he figures that if you look out to 2025, you can make the case for the S&P 500 getting to 6,000. Now, how does he come up with that number? He figures, well, earnings we know have been growing like crazy this year, and he sees at least some of that continuing out for the next 4 years. He's figuring on an economic expansion that would allow companies to increase profit to the point where if you look at the S&P 500 on what's called a per share basis, so, taking all the company's earnings and then kind of dicing it up for each one's share of the index, $300. That's the number
what I'm
he's working with.
Yeah, that's where you'd have to get within the 20 multiple on there.
Exactly, and that's what he suggests, the 20 multiple, because that's kind of in line with where we are now. So that's how you get to 6,000 in 2025. Now, can you make a forecast that far out and have it stick? Who knows? But at the very least, the idea that a number like this would be floating around and a time frame like this would be floating around, if nothing else, it's an indication of how much optimism there is at the moment about stocks.
Dave, given the mega caps in the S&P 500 and that, we have Apple at 6% of the S&P 500, Microsoft at 5.7%, the list goes on, Amazon, Facebook, Alphabet, Berkshire Hathaway, Tesla, NVIDIA. Those companies have to do really well over the next few years in order to reach this goal.
Right, and they have done really well for many years already, for the most part. And so that, I suppose you could say, is built into the projections as well. If you want to know what I'm talking about, folks, and see the chart I put together featuring the earnings and the share prices as represented by the S&P 500, send me an email. And I'll get you that chart, the explanation that goes with it, and everything I do going forward. The address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
All right, Dave, give us your stock of the day on this Friday.
Joint Corporation. Now, you're probably thinking with a name like that, it's a pot stock, right? No, it is not. Think about People's
You said
Joints.
it, my friend.
Okay.
Right? It's a company that runs chiropractic clinics. Oh, and by the way, forget insurance. It's all pay as you go. That's part of their business model, so to speak. They came out with second quarter results. Earnings and revenue beat analyst average estimates in Bloomberg survey. They raised forecasts for the year. In fact, they didn't just beat. Earnings were triple the average estimate, and it's the fourth straight quarter where profit has been more than double what analysts were anticipating. So,
That's
all
good.
well
Yeah, that
received.
works. All
I
right.
mean, absolutely. Joint, by the way, the ticker is JYNT. JYNT.
Okay. See what they did there.
The shares have been up as much as 17% today, and they set a record. And this is a company that's been publicly traded since 2014.
Dave, shares higher this year by 295%.
Yeah.
All-time high.
That's a number that gets your attention.
That certainly is. All right, Dave Wilson is stocks editor at Bloomberg News. Check out his stock of the day just after 4:15 p.m. Wall Street time. You'll find it on Facebook, on LinkedIn, and on Twitter at The One Dave. All right, let's get a check on the latest world and national news with Denise Pellegrini in the Bloomberg 1130 newsroom in New York.
All right, thank you, Tim. Well, federal health officials are apparently racing to protect millions with weakened immune systems against COVID, and there are signs that a COVID booster shot could be authorized within days or possibly weeks. COVID patients continue to flood Florida hospitals. State Agriculture Commissioner Nikki Fried says COVID hospitalizations are at a new high with more than 13,000 patients.
Which unfortunately beats the all-time high record of hospitalizations that we set the day before, which also surpassed one that we set the day before that. In fact, our state makes up almost a quarter of all COVID cases nationwide.
And Fried also says Governor DeSantis has dropped the ball on the summer COVID surge. Mask mandate going back up in New Jersey schools. Governor Phil Murphy citing the Delta variant.
All students, educators, staff, and visitors will be required to wear masks inside of school buildings, regardless of vaccination status, for the start of the 2021-2022 academic year.
And Murphy, of course, also pressing for more shots in people's arms. And Dr. John Brownstein of Boston Children's Hospital calling it a matter of life and death for children.
While most kids do not get seriously ill, a few will get seriously impacted by this virus, and some small number will die.
And Brownstein also says the vaccines are effective against the Delta variant. And Oreo lovers are rejoicing. A first-ever Oreo cafe is now open at the American Dream Mall in East Rutherford, New Jersey, across the river. It offers everything Oreo, shakes, clothing, candles that smell like Oreos, and there's even a special secret menu with items like the Oreo Donut S'more Munch. I'm Denise Pellegrini. This is Bloomberg Radio.
Thank you so much for that update, Denise. Tim Stenovec and Paul Sweeney in the Bloomberg Interactive Brokers studio in New York. The China story is one that we have been covering very closely here at Bloomberg News. I want to start with Alibaba, Paul. Alibaba said we have a host of stories on the Bloomberg terminal today that are among the most read that have to do with Chinese companies. I encourage everybody to check them out. Alibaba, though, said to warn of higher taxes as a crackdown widens.
Yeah, this is this issue of the Chinese regulators, Chinese government cracking down on many sectors of the Chinese economy, particularly those companies and those sectors that raised a lot of capital outside of China in Western markets, particularly the U.S. And the first company that really got hit across the knuckles, that really got everybody's attention, was Alibaba. And again, their stock is down 15% this year, 26% on a trailing 12-month basis. This is a stock that had gone nothing but up and made Jack Ma, one of the world's wealthiest men, and certainly one of the titans to come out of China. But it's since crossed over to a lot of different companies, a lot of different industries. And this taxation issue, a lot of these internet companies enjoyed, I guess, some better tax treatment, and that was to support their growth and development. But that may be going away, is what the reporting is saying.
Yeah, the company's warning investors that this years-long government tax breaks that you were referring to, Paul, for the internet industry, those are going to start to dwindle, and that could add billions of dollars in costs for China's largest corporations as Beijing extends its campaign to rein in the sector. It's not just the technology sector, though, Paul, as we've been talking about. We talked about video games this week. We saw it with online education in the last few weeks, and there were reports earlier this week as well that the tobacco industries could be next.
Yeah, it's one of the things we've heard from some of the experts as it relates to China is, a lot of what they're going after, i.e. the government, is data. We want to have more control over this data. We think some of these private enterprises are generating too much data that we would like access to, and we think that gives them too much power, and that's behind part of it. And that kind of makes sense if you think about how the Chinese government operates, but it certainly wasn't what Western investors were really geared for.
I want to know what this means for TikTok and the potential IPO for
exactly.
TikTok. That's a big question. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. As we approach the close on Wall Street, S&P 500, it looks to rack up another record day. It's only up close to 4 points right now. That's enough for a record, though, at 44.32. Wells Fargo shares gaining right now about 4%, leading U.S. bank stocks higher after the July payroll data showed unemployment declining faster than expected as employers added the most jobs in nearly a year. Bank of America clients pouring money into the stock market may want to listen closely to the firm's chief equity strategist. He sees the S&P 500 heading down and value stocks as the place to be. We're at 3,800 on the S&P 500 for year-end, Jim Carrey telling Bloomberg TV today. And you have this rally in Bitcoin accelerating, the digital token climbing right now above 42,000. This is a key level to signal further momentum to the upside. The Dow is up 116 points. The Nasdaq Composite Index is 72 points lower. And some breaking news across the Bloomberg. The Biden administration is going to relieve Americans from paying their federal student loans through the end of January, extending the pause for the last time as the government seeks to keep the economy continuing to recover. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, what a busy week we've had in terms of earnings, in terms of economic data. Today, we obviously had the jobs number coming in better than expected. Markets generally moving higher. A lot of folks are trying to say, boy, is the next 5 to 7% move in this stock market higher or lower? Let's check in with Ryan Dietrich. He's Chief Market Strategist for LPL Financial. Joins us on the phone from Charlotte, North Carolina. Tim, if you don't know it, Charlotte's a little town southwest of Durham, North Carolina, the home of Duke University. Just want to point that out to you. All right, Ryan.
Small town, right?
We've had a lot of earnings over the past couple of weeks. We've had a lot of economic data here. What say you about this equity market here?
Well, guys, thanks for having me back. And before we go there, I do want to point out, we are right now at LPL, we're having what we call our Focus Conference with more than 10,000 of our advisors virtually. Speaking of Duke, we had Mike Krzyzewski speak virtually with our CEO, Dan Arnold, on Wednesday. And I'm not a huge Duke fan, I'll just get it out there, but it was an incredible,
Good for clearing the air early with Paul Sweeney about that, okay?
There you go. But anyway, that's my part about Duke. It was really cool at our Focus event with our advisors. But listen, there's, like you said, I mean, there's the strong jobs number. The Fed is still accommodative. The economy is doing better than we thought. But what's also happening? We're making new highs, right? Today could be the 44th new all-time high so far this year. What in the world does that mean? Well, guys, when you look at previous years up to this point, only two had more new all-time highs, 95 and 64. And that's a small sample size. What happened then, those two previous years, markets continue to be really strong on 95. They did pretty good the second half of 64. So I think the truth is there's momentum behind this market. History would say you definitely want to continue to be a buyer of any dips. But to answer your question, could the next 5 or 7% be up or down? We wouldn't be surprised if it was down, right? We haven't had a 5% correction since last October. This is August, the worst month of the year in a post-election year. September is the worst month on average. October is obviously volatile. So we've been bullish, come on you guys for a while, but I tell you, it makes sense. Maybe we could be due for some normal third quarter volatility here.
Ryan, what is it that sends stocks lower in the third quarter this year? What's the catalyst?
It very well could be. Yeah, it very well could be, the Fed policy and the inflation and the worries there. At the same time, I know it's in the best answer, but it's sometimes the truth. It's just been a while since we've had any volatility. Markets sometimes just get volatile to be volatile, but the inflation concerns are clearly still out there. And then also, hey, we're making new highs. People are pretty optimistic, right? I mean, sometimes when everyone's on one side of the boat, that's what can kind of trip things up, if you will. Jackson Hole obviously is a couple weeks from now. That's going to be, very closely watched. And are they going to talk about tapering or not? And what's it mean? What's the Fed think about inflation? And we've seen some pretty big policy decisions made at Jackson Hole over the years. So we're not saying that's the trip up situation, but that's just something to be aware of. And lastly, September, it's still out there. Remember last September, guys, we had nearly a 10% correction. Honestly, no one probably remembers why it happened. We just had a big rally, then a 10% correction, pre-election jitters. Sometimes the calendar can just be something you want to pay attention to.
All right, so Ryan, we're well through the earnings season here. We're going to have some of the retailers coming up next, some consumer names coming up next. How have you taken? Have these earnings? They've been great in terms of comparisons. Are they good enough for this market?
Yeah, we think they are. We are making new highs as we speak. I mean, it's amazing, right? I mean, I know recent data says we might be up almost 90% year over year in the second quarter. Just a couple months ago, we were thinking, about mid 50%. I mean, it's just amazing how quickly it's come up. So, but that's the key thing, right? It's all about expectations and, clearing the bar. And the bar is getting higher and higher. I mean, just today's number on the jobs number, obviously really strong. It's got some excitement. Look at the 10-year yield, right? The 10-year yield obviously has been surprising many to the downside. Maybe potentially form a little double bottom with a nice move higher here. So we're optimistic that earnings will continue to be strong, but we also think that early cyclical value group that has obviously struggled, no question about it, the last 2 or 3 months, is still where you're going to find some leadership the second half of this year. And with the action on the 10-year, we're optimistic that maybe we found a technical bottom here and you can start having a higher 10-year, which should be a tailwind for banks, financials, and value in general.
I know you're studying the technicals. I know you're looking at the technicals, but this is all happening in the background of the Delta variant spreading. We've been talking throughout the show about a potential softening in spending. There was some data from Bank of America, debit and credit cards. Yesterday, it said it decelerated meaningful spending, that is last week. And then today, we got some news from Chase that said spending data has softened recently as well. How do you look at alternative data like that when you're thinking about where the market's going to go?
Yeah, well, we obviously pay attention to it, but at the same time, we're almost back in that world where, well, it's bad news, good news, right? I mean, okay, so if the Delta variant is terrible as it is, and then the spending slows down, and we do see a little economic slowdown, because honestly, the jobs number was strong. A lot of that was before some of this Delta variant stuff, kind of started creeping up again. So we have to look at it like that. But again, if things start to slow down, well, the Fed, they've said what they've said, right? The Fed might actually, keep policy low for a while and then ignore tapering for a little bit longer. So as strange as it sounds, and fiscal policy still out there, so bad news could be good news. We saw that a lot last year, right? I mean, this time a year ago, markets in the midst of a 5-month win streak, and we had some of the worst headlines in our country's history. A lot of it was because, the economy came back, but that fiscal monetary policy is there. So it's just kind of the way, I guess you gotta look at it from a full picture point of view, and bad news could be good news from an investment point of view.
Ryan, what are your investment professionals, hearing from their clients these days? I know there's that wall of worry out there, and you can make the argument that it's higher than ever right now. So what are they hearing?
Yeah, I mean, great question there. So the two that we've been hearing a lot lately is Delta variant, which we just kind of touched on, but also stagflation, right? I mean, stagflation is the idea clearly that the inflation is going higher, the economy starting to weaken. So those are some of the things that are the concerns we're hearing about. Again, I mean, we're in the camp similar to the Fed that the inflation is probably transitory here. We had 2% inflation for like a decade, and we might see 2.5%, 3% for a couple of years coming off the worst recession in our lifetime. That's not overly concerning to us, but we're watching it closely. But those are the two things we're hearing a lot about. And you're right, there is a fear of heights. I mean, everyone's optimistic, then you get a little correction. I remember the almost 5% correction back in the late January, early February at GameStop. I mean, that was only about a 5% correction, not quite, but almost. There was a lot of fear on that, of modest pullback. So that's the thing we want to keep seeing. We're going to pull backs eventually. We want fear to come in, and that can be, wash out the weak hands and continue the upward trajectory that we think we're still on.
So when you see those meme stocks and even Robinhood today and so on, does that kind of point to you as this is a sign of a frothy market, sign of a top?
growth. Is how we're telling our more than 19,000 advisors how we see the world.
Ryan Dietrich, Chief Market Strategist at LPL Financial, joining us on the phone from Charlotte, North Carolina. Ryan, it is always a pleasure when you join us. Thank you so much for taking the time. Well, we are just a couple minutes away from the market close on this Friday, August 6th. Looks like a mixed session. We are off our session highs on the S&P 500 and on the Dow. Looking, Paul, like we are going to finish the day higher at all in the green. Would be a record on the S&P 500 and a record as well on the Dow. The Dow outperforming, though. It's up more than 0.4%. Coming up next, it's Bloomberg's Beyond the Bell. It's our cross-platform coverage of the market close with my colleagues from Bloomberg Television. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs, counting you down to the closing bell, and here to help take us beyond the bell. Our global simulcast right now, joined by Tim Stenovic and Paul Sweeney, bringing together our Bloomberg television, radio, and YouTube audiences worldwide. And Tim, this week, it's been a crazy week, but at the end of the day, this is about a market that seems to be comfortable right now with the economic pace.
Yeah, certainly the jobs report earlier today helping out with that. If we finish in the green at all today on the S&P 500 and on the Dow, which it certainly seems like we are going to do, it's going to be another record. A different story, though, playing out in the NASDAQ, where those tech high flyers are taking a hit, perhaps not surprisingly, as investors do get scared quite a bit with the prospect of higher interest rates, which certainly could be a possibility. At least that's a signal, Paul, that the bond market is sending us after a day like today.
Yeah, it's interesting, as we were just talking about, Tim, this has been a really busy week for the markets. A lot of economic data, a lot of earnings data, earnings continuing to come in, well above expectations. Certainly the comps are easy versus last year with the pandemic, but really coming in strong versus the expectations. Generally pretty good guidance, although a lot of delta caveats, if you will. And then, of course, we got the jobs day today, giving a little bit of a backdrop to what corporate America is seeing.
Yeah, jobs data looking strong. Now all eyes trained on the inflation data for next week. How will that start to echo the concerns that maybe the Federal Reserve will step in here and start to make a move, while we still have that delta concern that is seemingly impacting commodities markets, maybe more than a little bit than the equities markets, Taylor?
And it really comes on a week, Romaine, we were talking about the David Costa note from Goldman, raising the price target to 4,700, 49 next year.
Yeah.
I'm loving this chart by Mr. Dave Wilson on our team. Jim Paulson out by 2025. He won 6,000 on the S&P.
Yeah, but then you had Bank of America's chief equity strategist, Joe Carey. She was on Bloomberg Television earlier this morning. She's got a 3,800 target on the S&P 500 right now, saying that there's just too many macro factors driving this. This isn't fundamentals, and you got to maybe pause here. That would be about a 14% correction from where we stand today. And where we stand today right now is 44.36 on the S&P 500. That's good enough for a record high. It's only up 0.2%, but that's good enough, up 7 points on the day. The Dow Jones Industrial Average, of course, sticking to that price weighting, 144 points, up 0.4%. I believe that is a record high as well. The NASDAQ down on the day, down about 59 points or 0.4%. And you take a look at the Russell 2000. The Russell 2000 finally getting in on the action, up 0.5% right now, 2247 and change. Taylor.
Yeah, let's go through some of the numbers on the week here. The Dow higher by 0.8% over the last 5 days. The S&P 500 up almost a full percentage point. The NASDAQ, the outperformer, despite today's decline of 0.4% over the last 5 days, finishing the week higher by more than 1.1%.
Yeah, and you guys, it's been interesting. We've been in the middle of this horse race of earnings. We haven't properly been able to do a sector level. Let's do it now as we have some calm amongst earnings on a Friday afternoon. For the radio audience, sector winners, sector losers. The winners is where we start. You would have guessed it, with yields up 9 basis points. It's banks, it's financials, and in some of the classic riskier sectors, materials and energy, that are up almost 3% on the day. We migrate, of course, down to some of the losers as we've seen yields rise. Some of the tech-heavy sectors have been selling off. Indeed, it's tech hardware, some of the biotech, some of the auto chip makers, of course, that are some of the losers, Tim, on the day. Worst performer off 1.3%.
One of the best performers, though, Robinhood. You know that I cannot go a day without checking in on Robinhood, finishing the day higher by close to 8%, rising 57% for the week. For those keeping track at home, that's higher, 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 lower, higher. The reason higher today, it said that some of those early investors who yesterday we learned were filing to sell almost 100 million shares of the company's stock, they will not be able to do so until they get clearance from the SEC, so investors happy about that. Let's talk a little space. Virgin Galactic finishing the day higher by more than 5.8%. Hey, how does $450,000 sound for a jaunt just about 50 miles above the Earth's surface? Hey, for Cowen, it sounds pretty good. The company's saying the new ticket price versus $250,000, it highlights highlights the rise of, quote, experimental luxury, I should say, among high net worth individuals. We got to talk about the decliners here. Expedia finished the day down by close to 8%. I know you guys had him on Bloomberg TV earlier today, Peter Kern, the Expedia Group CEO and Vice Chair. He said, even though this isn't COVID all over again, when cases go up, when local governments change their recommendations or lock down, that changes things.
And Tim, that CEO speaking to us earlier and just saying, we have to learn to live with the virus. It's not going away.
It's something that we're increasingly hearing from public health officials as well. Also want to check in, speaking of virus, on Novavax, down more than 19.6% today, said it was delaying U.S. submission for COVID vaccine clearance, guys.
Guys, let's speak about the virus and go cross-asset about that, because this is where it's been impacting commodities. I'm looking at, well, oil currently off by 1.4%. Worst week for oil that we've seen in 10 months. This is the reflection of the global concerns when it comes to the Delta variant. This is the worry about what's happening in China as well as here in the United States. So oil takes the brunt of it as well. Interestingly, we've seen commodities sell off in general. Iron ore having a terrible time of it of late as we continue to see the pushback in China of course, the commodity that helped make steel off by 2.75%. Steel, as I say, off by 0.7%. This is all in the spectrum of a dollar pushing higher. No wonder commodities are pulling down. Remember, gold having a pretty awful day today. And we see the dollar, your only element of green in your vertical that is the foreign currency board on the global macro movers. Dollar index up 0.5% as we see that labor data coming in strong. What does that mean in terms of Fed movement, in terms of push up in yields? And I speak of yields rising across the board in the UK, in Europe. And I know you were looking at them in the US as well, Taylor.
Yeah, shout out to our producer, Faith, where every Friday she tries to give me weekly yields. And today I nix her idea. And I say, unfortunately, on the week it isn't showing much because all the action has been, you guys, on an intraday basis. Take a look. This is on the day. You're up 5, 8, 9 basis points, all on sort of that reflationary theme with some of the jobs day. Earlier this week, we were at a 112 on the 10-year, Tim. We're looking at a 130, a 195 on the 30-year as well as we march higher back up above 2%. And really, frankly, it's coming all on that jobs report, Tim, with really better than expected and what it means for, well, does it taper? Does it come sooner? And what does it mean for these markets?
Yeah, and what does it mean for the Federal Reserve? It's an interesting question. I put it earlier to Michael McKee, our international policy and economics correspondent here at Bloomberg TV. And he said, hey, keep in mind that 1 month does not change things significantly. This is 1 month, and sure, the revisions for May and June were really good. But as far as substantial further progress, it's further progress, but perhaps not substantial, Paul.
Yeah, I think what we're going to have to pay attention to in the upcoming data, maybe some of the high frequency data when you're looking at economic trends, is the Delta variant and what that means for getting people back to work. And again, we still have 7 million plus people that are kind of below where we were pre-pandemic, and it's going to be a challenge getting those folks back to work. But that's a focus, and the question will be the Delta variant. Is that going to really put a hinge?
But doesn't the Fed need to get out in front of this? I mean, this seems to be the conversation that you're hearing from some of the Fed members. Obviously, we referenced the Kaplan interview a little bit earlier. The idea here is that there is enough economic data out there for maybe the Fed to at least be a little bit more serious about, I guess, addressing some of that financial support, the monetary policy support, some sort of normalization here. And when you get a type of print like this with 943,000 jobs, that revision, of course, from the previous month, when you dig into that household survey data and you're talking about 1 million people coming back in the self-employed and part-timers payrolls, when you talk about that bump up in wages and then you fold in some of these supply chain issues and elsewhere, you have to wonder, when does that conversation start, at least publicly? We know they're having that conversation behind closed doors, but publicly, when do they start communicating that to the markets?
Start communicating maybe as soon as Jackson Hole. Meanwhile, of course, we see the federal side of the equation still going pretty strong in terms of the government spending. We're still hashing out some sort of infrastructure deal that was much smaller than the original planned. And is, get this, being thwarted by crypto? Who would have thought that Ethereum and in some way the spending of the federal government would intertwine and actually get sort of stuck, Taylor?
Caroline and I, I'll have to go back and check my grammar. We are going to host a show called Crypto and Munis Worlds Collide. Thwarted. Munis have been thwarted because crypto gets in the way.
Well, who would have thought, to Caroline's point, that a part of the bill that, was really only a few pages of a 2,700-page bill would actually, derail this. I mean, we're talking like tens of billions of dollars out of a bill that costs hundreds of billions of dollars, tens of billions of dollars in revenue that this was supposed to raise on.
Well,
in terms
it's
of
an important
crypto.
provision, though, too, and it was one that was just so broad. I mean, it was almost ridiculous. I mean, when you looked at it. So I think the idea that somebody actually saw this, flagged it, and the idea that now they have to sort of address this, and obviously they're going to have to do this over the weekend if they want to get it done. But, I mean, this is something that really was just so broad in nature, you just wonder how it even got there in the first place.
Yeah, and Romaine, I think the market's fully discounting that we're going to get this legislation across the finish line, and the question really just becomes, you know, this broader spending plan that's still out there, and we don't know how much support that bill has, but that's going to have to be done.
And we should just point out the timetable on this. I mean, even if the Senate does get this through, remember, the House is out. I mean, they're not even coming back to September. So, I mean, we're talking about a pretty long runway here before this would ever get signed and actually start to be implemented.
Well, by the way, not a bad gig, right? Go back to work in September? Sounds pretty good right now. That's going to do it for our cross-platform coverage today. Be on the bell on Bloomberg TV, Bloomberg Radio, and on YouTube. Join us same time, same place on Monday. Have a great weekend, everyone. We'll see you on Monday.
A great weekend, Tim and Paul. Meanwhile, more markets coverage coming right up. We're talking about...
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so there you have it. It is the last trading day of the week, Paul, and it was a week that ended in the green. Although the Nasdaq was lower today by more than 0.4%, still finishing the week higher by more than 1%. The S&P 500 higher by the tune of 0.9%. The Dow finishing out the week higher by close to 0.8%.
Yeah, it felt like a little bit of a kind of reopening trade type of day. The Dow, the S&P higher, the Nasdaq off just about 0.4%. People looking at the jobs number and saying, it's our economy is we're adding those jobs back. Maybe we're getting close to that point where we actually put 1 million people back to work in a particular month, which would indicate a real improvement. But again, the Delta variant is still out there.
You make such a good point there. That data that we got today from JP Morgan Chase that's saying spending data has softened. That type of stuff is going to be really important to look at in the coming days. Let's get a check on the latest world and national news with Denise Pellegrini. Hey there, Denise.
Hey, Tim, we got a lot going on. First up, there's some good news. We've been talking about it with students with student loans. President Biden extending the freeze on student loan payments until February, and this means those next payments will likely be due in March or April instead of in November after an end of September expiration. And in addition, this means student loans will not accrue interest again until February, and that means if you have loans and you can afford to make payments, you have a chance to pay down the actual balance instead of having so much of your money go toward paying interest. COVID hospitalizations in Florida are surging, and White House Press Secretary Jen Psaki slamming Governor DeSantis for blocking localities from issuing mask mandates.
Our message continues to be that if you don't want to abide by public health guidelines, don't want to use your role as leaders, elected officials, then you should get out of the way.
And asked about rumors of a possible federal government mandate for nursing home staff on vaccines, Psaki says they'll continue to follow the science. Developments in Governor Cuomo's defense. A state AG investigation is determined. As you know, he harassed 11 women. That's the accusation. Cuomo's attorney says there are facts, though, contrary to the report and related to one of the women's claims.
The documentary evidence does not support what she said. And what is disturbing to me is that the two investigators did not show that evidence to you. They ignored it.
And that's lawyer Rita Glavin speaking at a press conference as we speak. And if you have a Bloomberg terminal, you can watch it and hear it on Live Go. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. We appreciate that. Well, U.S. Secretary of Labor Marty Walsh says the July payrolls report shows the U.S. economy is moving forward across sectors. He also said some sectors will need to see higher wage growth to improve hiring. Walsh also touched on companies increasing their vaccine mandates for employees. He spoke to Bloomberg's Jonathan Farrow. Let's listen in.
We're seeing our economy moving forward. We're seeing people going back into all sectors. It's not just leisure and hospitality, although that was our biggest gain again this month. But we saw people in education and government, education, and also in manufacturing. So we're starting to see different sectors getting busy as well. I think in some sectors we're definitely going to need to see higher wage growth for people to come back to work. But I think where we're headed right now, I mean, all signs are incrementally going in a good, positive direction. The president said he supports companies when they put those mandates in place. We're taking a different approach to the federal government. We're asking people to get vaccinated, and if they don't get vaccinated, we're going to do lots of testing. So anything that we can do to encourage people to get back into the workforce is important. I think there are people that don't want to get vaccinated because of whatever reason it might be. Some people have good, legitimate reasons, but the majority of people that aren't getting vaccinated, it's a political thing, and it shouldn't be a political issue.
All right, that was U.S. Secretary of Labor Marty Walsh speaking with Bloomberg's Jonathan Farrell on those strong labor numbers this morning. Again, better than expected jobs number. Saw some good wage increases. We saw some good growth across a number of categories, including leisure and hospitality, as those industries continue to open up. But Secretary of Labor Mr. Walsh did point out that the Delta variant is something that they are paying attention to. It is having an impact, and it is something that's going to require concerted effort in terms of vaccines and other efforts as well. So strong numbers coming out of the labor market, and that is something that we really need to see. You know, 70% of the economy is the consumer. We need to have the consumer back strong, back to work, earning strong wages. Still a ways to go relative to where we were before this pandemic, but again, a good step forward today. We'll have more coming up. This is Bloomberg. Bloomberg Business Week is brought to you by Hofstra University's Frank G. Zarb School of Business. Zarb Executive MBA is built for working professionals and can be completed in as few as 11 months. Visit hofstra.edu/graduate. It is 4:15 on Wall Street. Time for Drive Time Traffic. We do it every 15 minutes. Adam Walski, how are things looking on the Cross Bronx Expressway?
I'm afraid not too good, Paul. We have a couple of accidents on the Cross Bronx, one eastbound approaching the Sheridan, the other westbound by the Major Deegan, so long delays in both directions. And if you're trying to get to the New Jersey-bound George Washington Bridge, it's going to be a long ride, whichever approach you pick. For example, the northbound FDR Drive delays begin in the 40s. They continue up onto the Harlem River Drive and all the way up to the George Washington Bridge. Lincoln Tunnel, 20 minutes in, 45 minutes out. The Holland Tunnel is 20 minutes in, more than an hour on the New Jersey-bound side. And you have delays in Connecticut, northbound 95 from Greenwich all the way up through Bridgeport. And the Bloomberg 1130 three-day forecast. Plenty of sun this afternoon with a high near 90. Partly cloudy tonight, low near 70. Becoming mostly cloudy tomorrow with a high 85 to 90. Cloudy with a chance of a shower Saturday night, low 65 to 70. And partly sunny Sunday with a high 85 to 90. This update sponsored by Discover. Discover matches all the cash back you earn on your credit card at the end of your first year. Learn more at discover.com/match. That's discover.com/match. Limitations apply. With the best ride in and out of the city, I'm Adam Walski, Bloomberg 1130.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Last trading day of the week, a day that ends with the Dow up 144, the S&P 500 up 7 points. That's enough for record closes on both of those indexes. The NASDAQ Composite Index ended the day down 59 points. Now, the push came as the U.S. added 943,000 jobs. The jobs report pushing rates higher, and that helped lift banks, the financials, the best-performing industry group in the S&P 500. Consumer spending in the U.S. surged in June by the most on record. All that reflects large increases in credit card balances and non-revolving loans, total credit jumping to $37.7 billion from the prior month. And word the Biden administration is going to relieve Americans from paying their federal student loans through the end of January. S&P 500 again up 7 points at the close. The NASDAQ was down 59 points. Check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
All right, John Tucker, thank you so much. We appreciate that. It is Jobs Day, so let's keep on that theme, and maybe from a different angle, because the pandemic really laid bare the difference between high, moderate, and low-skilled employment and just how badly our country has been doing in educating its people for the 21st century. Let's dig into that with Robert Bell. He's co-founder, Intelligent Community Forum. Joins us on the phone from where else? New Jersey. Robert, thanks so much for joining us here. You know, when this pandemic hit, if you were a white-collar worker and you had access to a computer, you could probably do your job pretty darn well from home, and working from home became a viable option for many, but for many, it wasn't. I'm thinking some of the blue-collar workers, some of the essential workers that had to go to work and assume those risks. Talk to us about what this pandemic has laid bare for us as we think about our labor market.
Well, that's exactly right. I've been working very comfortably in my home for since March of 2020. It's been great for me. I'm fully connected with everything. I've got the skill set to do it with. But that ironic term, essential workers, right? They're so essential, except we don't pay very much attention to them until we're in trouble. And they are people who have got a lot harder time. And of course, as you move down the income scale, down the education scale, life gets worse and worse, and you're more exposed to the bad parts of life, including the pandemic.
Yeah, and it seems like, again, when we saw some of the unemployment data coming out in the early part of the pandemic, it really skewed it negatively towards those populations at risk, whether it's the less educated, minority populations. What do you think should be done from just a skill developing perspective to maybe put some of those populations on better footing as it relates to not surviving a pandemic, but just being, more employable, have more possibilities?
Well, it comes down basically to what happens with individuals at the local level. At the Intelligent Community Forum, we've been studying communities around the world for about 20 years. We're up to about 200 at this point, and we're looking at them, how they solve this kind of a problem. One of my favorite examples actually comes from across the border in Canada, in the city of Winnipeg, that most Americans probably never even heard of, but it's the capital of Manitoba. There's this great high school there called Sisler, and it's in a low-income neighborhood. It was at one of the worst schools in the entire city, about 20 years ago when they hired a new principal who brought in a new staff, and they started working this problem. And so there's many, many examples, but one of the clearest ones is a digital media program they put together. Okay, so we're doing digital media. We're in Winnipeg, far away from pretty much anything, including much of Canada. These kids in this program, there were 180 of them enrolled in 2015. And as of now, more than 100 of them are either going to university, and again, they're probably the first in their family to ever do that, or they're already working in digital media because this school didn't just teach them. It went out and did partnership deals with companies like Nickelodeon and Netflix and Vancouver Film School, who are all hungry for talent. And the school said, we've got the talent solution for you if you come and help us teach these kids. And it's the kind of model that we've seen work over and over and over again, that if you bring the worlds of work into the school and you create all kinds of ladders of opportunity for young people to advance, they seize them. So it's a matter of breaking down the silos and helping people, seize the opportunities that are right there. It just takes a lot of work.
So, assuming that education is a big part of this, and this being, training folks to be more flexible and be really be able to participate in this 21st century economy in the States, is it something that should be embraced more by the high schools or trade schools or community colleges? Do we have some success stories here in the States?
Absolutely, and it's all of the above. In our organization, we call it the ladder of opportunity. Right now, we have this weird siloed thing, which does not fit the 21st century, which says you go from elementary school to high school, and then you go from high school to a community college, trade school, a university, and they don't connect with each other. And in the successful examples we've seen, Columbus, Ohio is a great example. They've got this program there that's a regional program called the Central Ohio Compact, where they got K through 12 higher education, business, economic development leaders together in an organization to pound away at this issue. They're trying to raise the college readiness, the ability of young people. And again, they've got a very large low-income population in that area to advance through school successfully. Honda is a participant, and Honda has created a program with all of them that allows students to graduate from high school with an associate certificate in automotive technology, which can get them right into a job at Honda if that's the direction they want to go. So it is this matter of trying to break down the walls that separate the world of work and the world of higher education from the world of the education that we're legally obligated to provide our students.
Yeah, one of the other things, Robert, is financial literacy. That seems like that needs to be something that kids coming up today have a better understanding of.
There's actually from the same city, there's this great story. They actually built an app for this, and the app walks you through basic financial literacy. And one of the outcomes they explained to me, which I loved, it says, basically you finish this part of this app and you learn that if you've only got a high school diploma, you're probably not going to get that high-end sports car that you'd like so much.
Right. Yeah, exactly right.
Again,
so, all right.
We don't teach it to kids, so how would they know?
Yeah, absolutely right. Robert Bell, thank you so much for joining us. Really appreciate you taking the time. Robert Bell, he is the co-founder of the Intelligent Community Forum, joining us on the phone from New Jersey. And his approach is really taking a look at ways that we can train and prepare young adults who are coming into the workforce to perhaps have the skills required for the 21st century economy. Because what we learned from this pandemic is the pandemic, in terms of the employment numbers, the labor numbers,
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, coming up, a topic that really fascinates me, and that is cybersecurity. We're going to dig into that. We're seeing cyber hacks all over the place, and it's becoming, during this pandemic, we spent more and more time working from home, learning from home, putting more stuff online, more stuff up in the cloud. It's become a bigger and bigger issue. We're going to dig into that. But first, let's go to John Tucker and get a Bloomberg Business Flash. John.
Hi, Paul. The S&P 500 and the Dow ending the day with record highs. The jobs report today helping that. U.S. job growth accelerating in July by the most in almost a year. Unemployment rate declining. Payrolls climbing by 943,000 last month after upwardly revised increases to the prior 2 months that led to a rotation out of growth into economically sensitive cyclicals. The best performing industry groups belong to the financials, materials, energy, and industrials. Information tech and consumer discretionary stocks, they were the biggest drag. Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams says company earnings estimates could see upward revisions right into 2022.
So to the degree that we have much faster than expected growth and persistent growth, those two things are very important. If we get both of those over the course of the next several quarters, we're going to continue to see upward estimate revision.
Well, as more stores, restaurants, and bars reopened in June, Americans borrowed a lot more money, the most on record. That's on auto loans, school loans, especially on their credit cards. Added up, total credit shot up by almost $38 billion from May. And President Biden has extended the moratorium on federal student loan repayments now through January. Again, the S&P 500 was up 7, a record. The Dow was up 144, a record. The NASDAQ closed down 59 points. The 10-year yield, 1.3%. Right now, it is down 7 basis points. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
All right, John Tucker, thank you so much. We appreciate that, as always. All right, over the last 17 months or so, we've been working from home. We've been schooling from home. We've been putting more and more stuff online, more and more stuff up in the cloud, and of course that raises the risk of cybersecurity. And let's dig into that topic because it just doesn't seem to be going away. Teresa Payton, Chief Executive Officer for Fortalice Solutions, former White House Chief Information Officer under President George W. Bush, joining us on the phone from Charlotte, North Carolina. Teresa, thanks so much for joining us. This really, it's always had my attention, and I think many folks' attention, but boy, when Microsoft gets hacked, that really gets your attention. Just help us frame out kind of where we are in the world of combating or preserving cybersecurity.
Yeah, and first of all, I applaud Microsoft for being incredibly transparent and warning organizations and companies and victims that there was a problem and how to fix it. And so I applaud them for how they handled everything. But it's just an example of it doesn't matter if you're a small business, a large corporate, or have the best and the brightest. Cyber criminals have nothing but time on their hands, and they only have to get it right once. We have to get it right every minute of every day. And so that's why a different type of thinking needs to happen. And the thinking needs to be, when that incident, that cyber incident happens, how prepared are we to recover from it? How resilient are we? It's very much how we think about natural disasters when they happen. You can't stop hurricanes from coming, but you can have building standards, you can have inspections, you can do a lot of things to be prepared for when hopefully that event doesn't happen, but when it does, to be able to recover as quickly as possible.
Yeah, when these happen, Teresa, it's such big news, and it's such a public relations nightmare for the folks that do get hacked. Maybe in the case of Microsoft, it's embarrassing for them. Do you get a sense that the average company, the average board of directors, the average C-suite is paying enough attention and investing enough in protecting its network, its data, its customers?
I do. I mean, the ones that I meet with, doing ransomware tabletop exercises, for example, and rehearsing what would the company do? What decisions would a CEO and the board make in the event that they are the victim of some type of a cyber incident or cyber attack? It could be insiders or it could be nefarious outsiders. And the CEOs and the boards, they are very concerned. It's on their list. But sometimes they're not exactly sure where to get started. And they know they're spending a lot of money, but there's no guarantee that spending money and time and buying tools is going to stop bad things from happening. And so they're just not really sure, like, how much is enough and where should they get started, and what does best-in-class cybersecurity look like for their particular organization.
And, you know, it seems like we're getting more and more either state-sponsored or state-enabled cybersecurity issues and hacks and ransomwares and things like that. How is that trend developing?
Yeah, so it's been a very disturbing trend, actually, and you know, it's sadly one of the few things that you can count on. You can't always count on like the stock market and the stock that you hold in your portfolio to go up indefinitely, but the one thing you can count on that seems to go up indefinitely, unfortunately, is cybercrime. And there's a combination of things that create that perfect storm for why it continues to kind of go up indefinitely. For starters, it's never been easier to decide on a life of cybercrime and pursue it. You can actually go to dark web forums and buy very rudimentary hacking kits for as low as $1 US. You can join these affiliates with very little training, and they will train you up to do your task as part of a ransomware syndicate. And if you get caught, if you get attribution and you happen to be in one of the many countries where we don't really have any extradition sort of capabilities, you're probably not going to see jail time. So it ends up being something that's incredibly lucrative, very easy to get started, and you don't need a degree, you don't need certifications, you just need a computer and access to the internet. And there's not a lot of jobs on sort of the private sector and government sector enterprise where people say, it's okay if you don't have experience, we'll train you as we go. You know, a lot of people are looking for work, and nobody says, oh, you just need a computer and the internet on the good guy side in many cases. So, and if you also look at where these cyber operatives tend to be, even if they're not nation state sponsored, they tend to be in countries that are fairly economically depressed as far as sort of like these cyber operatives that are operating as syndicates. That doesn't mean we don't have them in the United States, because we certainly do have cyber criminals here, but they tend to come from the countries that have economic depression.
Hey, Teresa, please stick around. We're going to do a little bit of news, and then we're going to come back to you and kind of go a little bit deeper into this topic here and thinking about, you know, what some of the defenses could be, the role of the U.S. government in this growing issue of cybercrime and cybersecurity. Teresa Payton, Chief Executive Officer for Fortalice Solutions. She joins us on the phone from Charlotte, North Carolina. She'll be back with us in just moments. Right now, let's get a check on latest world and national news with Denise Pellegrini in the Bloomberg 1130 newsroom in New York.
Hey, Paul, Phil, thank you. We have some COVID news here. COVID hospitalizations in Florida now hitting new record highs. Governor DeSantis says he's watching the situation.
We're at a kind of a height of the wave, and we think it's following a pretty set pattern, and we'll know more probably in the next 3 or 4 days.
And DeSantis is facing pressure to declare a new health emergency, but he says most of the elderly in the state are already vaccinated, and he also says the state has a big PPE stockpile already. Mask mandate going back up at New Jersey schools.
All students, educators, staff, and visitors will be required to wear masks inside of school buildings, regardless of vaccination status, for the start of the 2021-2022 academic year.
And Governor Murphy says that's in part because some children can't get the vaccine yet. Meantime, J.P. Morgan Chase is among the banks bringing back its mask mandate. That's even for vaccinated employees. And New York City's public hotel has just become the first to insist that all guests, visitors, and staff are vaccinated against the COVID-19 virus. And that's according to owner Ian Schrager. Lawyers for Governor Cuomo are pushing back against the Attorney General's report saying the governor harassed 11 women. Rita Glavin says investigators ignored evidence that contradicts some of Cuomo's accusers' claims.
We're entitled to get the transcripts, the underlying documents that support that report, because what we know is that they have left material out.
And Glavin is asking investigators to look at all the information. And if you have student loans, good news, no payments due now until early next year. Global news, 24 hours a day. I'm Denise Pellegrini. This is Bloomberg.
All right, earlier this week, my co-host Tim Stenovec and I, we called up with Tim Higgins. He's a reporter for the Wall Street Journal to talk about his new book entitled Power Play, Tesla, Elon Musk, and the Bet of the Century. We started off by discussing how Tesla went from a struggling company to the juggernaut it is today. Take a listen.
Yeah, you have to remember in 2018 it was pretty bleak, right? Elon Musk seemed to be having a meltdown on Twitter every other day. The company was short on cash, as you said, and it just seemed improbable that they could keep the story going. But one of the big turning points was after the third quarter in 2018, when Elon Musk and Tesla surprised the world and came out with a profitable quarter in large part because they were able to get the Model 3 compact car into customers' hands, paying customers' hands. It was first it was manufacturing hell to make the car, and then it was delivery hell to get it into those customers' driveways. They weren't out of the woods then, but it was a moment that gave new hope. 2019 continued to be problematic, but really it was clear that things had changed for Tesla in 2020 during the pandemic, when they continued to build cars despite great challenges, deliver those cars and turn profit, and create the ability to raise a lot of money very cheaply by issuing new shares that gives them a war chest to go forward.
That was Tim Higgins, a reporter for the Wall Street Journal, talking about his new book entitled Power Play, Tesla, Elon Musk, and the Bet of the Century. I'm a couple chapters into it. It's really good. Hopefully I'll finish it maybe on the beach this weekend. But really, he got really close to the company. Lots of resources, lots of interviews, and just a fascinating story. Elon Musk, it's hard to believe, but just a few years ago, the company was really struggling, and you didn't know whether it would even make it. And now look where it is now, and look where Elon Musk is. Catch the rest of the interview all weekend on Bloomberg Radio, and catch the podcast on Bloomberg.com and on the Bloomberg Terminal. Really fascinating book. Look forward to finishing that. We're going to have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. S&P 500, the Dow Jones Industrial Average rose, both marking all-time highs. It declines for several big tech companies that help pull the NASDAQ Composite Index down. The government's monthly jobs report showing that hiring was stronger across the economy in July versus economists' expectations. Among the individual shares on the move, United Airlines requiring workers to get COVID-19 vaccinations. This is the first major U.S. carrier to do so. Employees have to establish proof of inoculation no later than October 25th. Then you have Goodyear Tire and Rubber. Shares are higher, surging the most in 5 months, after reporting a quarterly profit of 32 cents a share. And Dow Jones Industrial Average was up 144 points at the close. The S&P 500 was up 7. The NASDAQ Composite Index fell by 59 points. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
All right, John Tucker, thank you so much. We appreciate that, as always. Let's bring in again Teresa Payton. She's a Chief Executive Officer for Fortalice Solutions. She's also a former White House Chief Information Officer under President George W. Bush. She joins us on the phone from Charlotte, North Carolina. We're talking cybersecurity. And Teresa, I wanted to pivot a little bit and talk about the U.S. government and the role it's playing to defend us, corporate America, individual America. If I'm a CEO and I'm spending seemingly gajillions of dollars to protect my network and my data and my customers' information, am I getting any help from the government in protecting our overall national grid?
You certainly should. And there is some level of assistance, but we obviously have to do more, better, faster, more effectively. You may have seen the U.S. Senate report that was put out earlier this week grading the U.S. government agencies, and they gave several of them Ds, and there's an overall average of a C. And so as you think about as a business, if the government can't protect the departments and agencies, how are they going to be able to assist? Now, there's a lot of great work coming out of Department of Homeland Security, CISA division, and FBI has something called InfraGuard for businesses. It is free to join. You just have to do a background check, and they will actually give you tips, ideas, emerging trends, different indicators of compromise to look for, different files to look for on your network that are industry specific. And so that can be a great way to connect to what some of the threat intelligence that's coming out in real time. You're not going to hear other victims' names. That'll be anonymized, but you'll hear what happened to them and know how to lock your doors and lock down your windows to make sure that your digital assets stay safer.
Yeah, I saw that that report, a D for cybersecurity. Was that a surprise? Maybe it shouldn't be, but boy, that's disappointing when the U.S. government has, does not do well, does not excel at protecting its own systems.
Yeah, it's very challenging. And one of the things that many companies have, and certainly our federal government has, is a real sort of technology deficit where you've got these old systems that really aren't built to be integrated to other systems and certainly not connected to the internet. And that is creating a lot of these different vulnerabilities. And these systems are so complex and massive, it's just not simple to say, well, there's a front door and a back door, lock those up, and we should be good now. It's very complicated. And sort of the interoperability of all these different systems and the data, layer on top of it, it's a pandemic, and many people are working remotely for the first time. You add all that together, and it's just a prime opportunity for cyber criminals.
Talk to us about ransomware, and specifically, do you recommend that companies pay ransomware, don't pay ransomware? How do you come out on that?
I'm so glad you asked me this question, because ideally, I would love for victims to have every option at their fingertips to never have to pay. I don't judge the victims that got stuck in a very bad place and had no other option to pay. We need to have a dialogue around how do we get businesses ready so they don't have to pay? That includes creating backups that are out of band, not directly connected to your current operations, because the cyber criminals are looking for your backups first and locking those up. So store those, cold storage, or a different cloud services provider. The other thing to be thinking about is how do you create technology, barriers, if you will, between different systems. So if one system gets attacked, the ransomware syndicates can't lock up every system you have. Oftentimes they're going sort of these digital back hallways and they're locking up everything. Let's give you an opportunity to marginalize and minimize the impact that they can have. And then we need some broader and bigger thinking. You brought up the government. How can the government help? Well, what if we had, just like we have 911 at a national level and it's run locally, where if you have an emergency, you call and they dispatch the experts that you need. What if we had some type of a rapid response center where you called and said, oh my gosh, Conti or DarkSide or some new group is just locked up and they're holding my data and my operations for ransom, and we say that's okay, we're going to build you a decryption key, you don't have to pay, just kind of keep them at bay for a little bit and we'll be building you a decryption key. We need some out of the box creative thinking here, because ransomware syndicates, they're not going away, they're getting stronger. And DarkSide said they went away, and basically it looks like they've recalibrated under a new moniker called Black Matter. So they don't go away. They don't suddenly say, gosh, I should be a good person and help the elderly cross the street and bake pies for my neighbor. They just come back bigger and stronger in a different name.
Yeah, boy, if I were CEO or a board member, this would keep me up at night for sure, because it doesn't seem like a problem that has an easy or even a reasonable solution. Teresa Payton, thank you so much for joining us. Teresa Payton is the Chief Executive Officer for Fortalice Solutions, also former White House Chief Information Officer under President George W. Bush. She was joining us on the phone from Charlotte, North Carolina, talking about cybersecurity, cyber ransomware. It is a big issue for corporate America. All right, coming up in just moments, Bloomberg Sound On. Let's check in with Bloomberg Sound On host Joe Matthew. That's coming up on the 99.1 Washington studio. Joe, what do you got for us on Sound On today?
We got some jobs, and we're going to talk about it with the Labor Secretary. Sat down with Marty Walsh today over at the Labor Department, who was feeling pretty good about this number, 943,000, better than expected. But let's remember, that was last month. And those numbers were taken, not even towards the end of the month here. So there are concerns about Delta creeping into the numbers in August, September. You know where we're going. Is this thing going to slow down or not? That's what we'll talk about.
And, Joe, it looks like our friends in Congress might be putting in some work time over the weekend.
Another working weekend?
What's the schedule? What's the agenda?
I guess the earliest they could vote is Saturday night, but yeah, they're going to hang for the weekend. There's also a chance they could be here in town for a little bit of next week instead of, sitting back on, in the Hamptons. They're going to be here in Washington to begin the reconciliation process. If they get the first part done, they're going to try to start the second part before they leave town.
And a heat wave or a little bit hotter temperatures are coming. That's always where you want to be, is Washington, D.C.,
honestly,
right, Joe?
We're going to be looking at 100 degrees next week. Please take me with you.
Exactly. All right, so can we expect something? I mean, is this going to be bipartisanship at all?
Well, I think it's like part one and then part two. Part one is bipartisan. We're still arguing about crypto and pay-fors.
Didn't see that coming, Joe.
We're going to spend some time with the Blockchain Association talking about that, too.
Good.
Can you imagine 2 months later this is held up by crypto?
Right.
But yes, here's the thing. Most lawmakers don't know the difference between Bitcoin and blockchain. I mean, they're going to have to go to school on this as they try to figure it out over the next couple of days.
All right, Joe, that's coming up. We'll tune in for that. Joe Matthew, Bloomberg Sound On host. That is coming up in just moments from the 99.1 Washington studio. Joe's got it all wired down in Washington, D.C. His contacts are impeccable, so we'll have that coming up. All right, so we had a busy week here, winding up the work week, if you will. 5 o'clock whistle about to blow. We had a lot of economic data, a lot of earnings. We got more earnings coming up next week. We're going to hear from some of the retailers, some of the tech, and the retailers are going to be really important. So give us a sense of how that consumer really is right now, and those companies provide guidance. So we'll be on top of that. This is Bloomberg.